Hey guys, what's up? This is B from coattailtrader.com here. I wanted to do something a little different today. I wanted to show you how these levels work on other markets, not just the ES futures. So what you're looking at here is actually the crude oil futures contract going for July. Today was a very interesting day at about 8 o'clock in the morning, my time. That's when the economic reports come out, crude oil, talking about inventories and such, but I'll get to that in a minute. So you can see, as per usual, I have levels drawn on here. It looks just like the ES chart that we normally look at. You can see there are no indicators other than our deviation bands here, which we use just to tell us where price is in relationship to the mean. So we can see the market opened up right here, opened up below certain levels, which automatically indicates a bearish sentiment outside of the band. So obviously we knew there was going to be a pullback, or we were expecting one. I don't say obviously because markets are very irrational. So look where price stopped. Now in crude oil, because it's a penny increment tick, so not like the ES where it's 0.25 each tick. Each tick is a 0.25 move. In crude oil, it actually goes by the penny. So you can see here that our level was 61 and the price stopped at 77. Now when I'm trading crude oil, I like to use, very rarely do I trade crude oil, just because it's so volatile that my nerves are not ready to handle that yet. It's much more volatile than the S&P in my opinion. The thing I like about it too is that it's a very thin market. And what I mean by that is when you notice, if you watch the ES trade on a dome, on a depth of market or a ladder, as far as the bid and ask, you can see that there's hundreds and thousands of contracts waiting at prices. So there could be 2,000 contracts at one price, 3,000 at another. With oil, it's 20, 30, 10, 15. A lot easier to get in and out. So when price hits your target, 90% of the time you're going to get taken out right away. Whereas in the E-mini S&P, that doesn't always happen. It's a very thick market, so it takes a while sometimes to get out. So that's one reason I do like the crude oil. But the crude oil is just so volatile. It spikes like crazy. My nerves are not ready to handle that one all the time yet. I need to get my psychology better with crude oil before I can trade it regularly. Every once in a while, I will step in there just to see if I can handle it. I did not trade it today, but I just wanted to show you an example of how these levels work on other markets. So you can see, not surprisingly, price came down to one of our levels. I would not have been able to take this because it didn't qualify. I usually do a 5-tick bounce play. This one was, 76 to 6, so that's 15 ticks. So it wasn't close enough for me to qualify as a bounce. Obviously, you can see it would have worked. So it comes up to one of our levels that we're watching here, right? 10 minutes after the open, breaks through the level, but can't continue. What happens? And it's probably hard to see here, but it actually closes. This is your signal right here. It goes above, then closes one tick below. That's all you need in my rules that I follow, is one tick below the level counts. So you got your signal here. Here's your confirmation. Now, same thing with crude oil that I do with the ES is I always, on a short, I always try to go for the highest ask, and for a long, I try to hit the bid. So that way I can get in has a tick advantage. In this case, it wouldn't have worked out, I don't think, because price, well, actually it might have worked out. So if you would have put your signal in here, well, price closed at 28, so I would have put my limit order to sell at 29. So let's just hit this and see if it worked. Okay, it did. So actually this one would have worked. Now I usually go for about 10 ticks on these. So you can see I don't think I would have been filled, or I would have been profitable. Oh, look at that. 10 ticks right to the mark. Now with this kind of a market, it's easier to assume we would have been taken out, whereas with the ES, we don't always know because it depends on how many contracts traded there. Theoretically, this is the same thing, but because this is a very thin market, the odds are heavily in our favor that we would have been successful and we would have been taken out. At least we would have moved our stop to break even. So let's say we didn't get taken out. Once it hits around probably 5 or 6 ticks, I would move it to break even, and then as it got closer to 10, I would start moving it up 1 tick. So we could say theoretically that at the very least we would be at a 1 tick profit to cover expenses and such. So, but I would have safely assumed that we actually got our whole fill because this is such a thin market. So moving on, you can see here price comes back up to our level, closes above it. So here's our signal, but then it immediately closes below it, which invalidates the previous candle. Now we have to wait for a whole new setup. Well, we don't have to wait long. We get one right here, and here's your confirmation signal right here. So the stop for me would have been, the entry would have been at 40. So hard with these sometimes to tell. So it closed, this candle closed at 44, so I would have gotten in at 43. So my stop would have been, what is that, 28, and we would have been fine. Yeah, more than fine. So we would have gone for 10 ticks, 43 to 53, and boom, you're good. So depending on what your profit target is for the day, mine's usually on the ES, it's 2 points, which is $100. So I'm not greedy. I just try to do that for now. So with this one, you technically could, if you were going for $100, you pretty much would have been done right here for the day. If that one didn't work out, you would have been done right here for the day. So in less than a half an hour after the market opened, you could have made $200. 100 here and 100 here. Now, again, if we just assume that this one worked out because it should have, let me just see something here. So the signal candle closed at 29. Oh, it closed at 29. I'm sorry. So actually my stop, my limit would have been 30, and it never reached 30. So this one is a no trade. We would not have been filled here. Okay. So this would have been your first trade, and you would have been done for the day if you were going for your $100 move or whatever your profit target is. 200, 300, 1,000, whatever. For me, like I said, 2 points on the ES, so that's $100, and here you go right here. You'd have been done for the day. But if we just keep moving forward just to see what happened, we can see price comes down to our level. Now once it got here, I'd be looking for a bounce trade. And you can see it's set up for a bounce trade. Next candle, we did not get the confirmation. And then on the next candle after that, we actually get invalidated. So now we're looking short. This is our signal to go short, which cancels all this stuff right here. So we get our short signal. Now we're waiting for confirmation. We get it right here. This candle closes at 32, so I would have had my order in at 31. And I believe we definitely got that. Yep, we got 31. Oh, wait, am I doing that? Hold on. 32, I'm sorry. My entry would have been 33. So we would have been hit here, so 33 going for 23, which we definitely hit in the very next candle right there. So you can see that one would have worked out. There's another $100. Again, price moves back out. And I apologize for making so many mistakes on these, but these crude oil ones, it's tough. It's a lot tougher to do these ones because a tick is so small. You can see I'm barely moving it, and it's a tick. So I apologize if I'm off one. That's why I have to keep clicking this box to see everything here. But in S&P, I don't have to do that because there's a big gap between each tick. So I apologize. Okay, so here we go. Now this is an interesting one here. So price comes back up to our level. It's within our range. I see this close here. Now I'm waiting for a bounce trade because it's coming back to my level. So this is acting as resistance, this level right here. It looks like it's going to set up. This is not a signal, but it looks like it's going to set up one. But price invalidates it, closes right here. Now we're waiting for a long signal. Remember, my rule is 3 candles after, so nope, nope, nope. So now it looks like it might be setting up for a bounce off this level again, maybe to go long again. So if you waited to the next candle, you get your trade. It's within 5 ticks. Here's your entry candle right here. And obviously I don't even need to count. You can see we would have gotten that one, I believe, at least break even. Let's see. This candle, whoops. Let's see. This candle closed at 41. So 40, we would have gotten in at 40, looking for 50. Okay, so here's an example of where we would have gotten 1 tick. After it hit probably about 5 or 6, I would have moved to break even, and then we would have gotten taken out right here. We would have got 47. So we probably would have gotten, let's see, entry was 40. It didn't come back until over right here. So once it hit 7 ticks, I would have moved it up at least 1 above break even. So we would have made out with, what is that, probably $6, something like that. And then you can see it comes back to the level. Now this is an entry signal. However, look where it is. It's outside those bands, so I would not be taking that. I would be looking for a bounce play now. Since it looks like it wants to go short, I would let it breathe a little bit, let it come back. The market went down. This just indicates the market went down too fast, too much too fast. So it doesn't mean the market's not going to continue. It just means the buyers are probably going to come in and kind of bring this thing back for a minute, which they did. Now I'd be looking for a bounce play, which would be here, 32. Yep, that meets the criteria. So now, again, we're looking for a bounce trade, and you get it right here. Here's your bounce trade. But as you can see, you would not have gotten it. I would not have gotten it because this candle closed at 31, and this one never came back to 30. So I would not have gotten 32, I'm sorry. So I would not have gotten filled. We closed at 31, so my entry would have been 32 right here, and we never got it. But as you can see, the level still worked. Just because you didn't trade it doesn't mean they don't work. So again, here we go, coming up to our level. It breaks through, setting up for a long trade. Look at where it is in the bands. I'd probably be hesitant. Boom, this one closes, so this cancels this one. Now you get set up for a short right here. And this one you would have been able to get in. Closes at 32, so my entry would have been 33, which it hits. So you've been going for 23, which you get right about here. Either here or here. So that's another $100. Now this giant spike, you can see here that this is from the inventories, the report that came out this morning at 8 o'clock. I don't really know what those mean. I would have assumed that the more inventory that they have in the U.S., the cheaper oil would be, because that means the supply is high. It's very high. They were expecting a negative percentage, and it actually came in positive. So for me, I would just assume that would mean that prices would fall, maybe, just because the supply would outweigh the demand. Now, demand for oil is always there, but when you have too much of it, I would assume prices would fall. Well, in this case, obviously I was wrong, and I have to. This is why I don't trade oil, because the fundamentals, I don't understand it, but I'll have to do some more research. So as you can see, price just spiked like crazy. Look where it came, right to this level, closed above it. So this would have been a long signal setting up. However, look where it is in the bands, way outside of the bands, way overdue for it. Just went way too far too fast. So now I would be theoretically going with the levels. You can see that this would be technically setting up for a long. However, I'd be looking for a pullback, which you get a close here and you get your close here. So this one entry would have been 65, which, since it reversed so far, you definitely would have got. Now let's see, the stop would have been around 80, which you didn't get. Came close, didn't get hit. So you can see 64, 65 to 55, and you get that nicely right here. And now you're setting up. Now we got some levels on top of each other. We have basically 3 levels. Now with crude oil being what it is, I treat it just like the S&P. When I see all these levels, I would not trade until it broke all of them. So you can see here It did generate a long signal, which would have worked out if you took it, but it's way outside the band, so I wouldn't take it. Another long signal was generated here. Now, the thing we have to remember about these bands is that they always are playing catch-up. Whenever you have big moves, it takes time for them to build because it has to register the candles and everything. So this one's like a 50-50. It's a signal. It's valid. It's on the band. It's a little bit outside. It came outside and came back and closed a little bit outside. So that's kind of like, a coin flip. Like, you take it or don't. There's really nothing else to go off of to see whether it would work out or not. In my opinion, when that happens, that's a no trade for me. When I have to guess, I just assume let it go. Which, sure, there's a lot of money left on the table, but it doesn't matter. I'd rather know that I'm not going to lose than think I might win. So here, I'm seeing the next level come. And now I see price stop and close here, so I'm like, okay, bounce play. 75 to 81, that does not qualify. It's more than 5 ticks, so got to wait. And obviously, you don't have to wait very long. Another, 2 minutes. It comes back up, touches the level to the tick, right to the tick, comes down, sets up 1, 2, boom. But obviously, as you can see, you would not have gotten that because it just fell too fast. So now you'd be looking again. Okay, you would have missed your bounce play. But it doesn't matter because now the very next thing, look. So price breaks above this, but not only is this a major level, it also comes outside of the band. So I would not trade this. Obviously, this is the signal, but there's no confirmation. So now we'd be looking for a bounce play. Here is a bounce play, boom, setting up, but it invalidates right here. So now we're looking for a short signal or a long signal. Maybe we'll just let this play out for a second and see what happens, since it looks like it might happen now. Okay, it's setting up for a short. If it closes lower, that's a short signal. Oh, I think it closed right. Yep, that's a short. So this closed at 78. This closed at 77. That's a short signal. So entry is 78 to 88. Let's just 78 to 68. And the stop would be about right here. So let's see what happens. I don't know how long YouTube will let me record this. I think it's only for 15 minutes. So I might not be able to let this one go. That was a valid short signal. Everything's set up there. You got your close, your rejection, and your close again. So you're at 78, and you're looking for 68. So right here. Price probably. And then your break even if you're at 78. I would say when it hits 73, 74, I would move it in there. Price coming back. Might not have to wait long to see if it would have worked out or not. But as you can see from the trades that we did earlier, I mean, you'd probably be out by now for the day. I mean, I don't think it's a very smart thing to do to continuously trade all day. Because you're risking any profits that you have. Once you hit your target, you really should stop for the day. Did it hit? Nope. You should really stop for the day and do something else. Maybe analyze a different market. Try to come up with new strategies. Whatever you want to do. But I don't really suggest trading all day long, just because your brain starts to act a little funky after when you've been trading for so long. I don't think I'm going to be able to let this one go. I will record again and let you know. I'll make another video and let you know if it works out or not. But it looks like it's probably going to work out. Price just got rejected off this level again. Oh, there you go, 75. So 78, and it just hit 75, 74. I'd be moving now. I'd be at break even. So now the only thing you're risking is commissions. So your entry was, what's your entry on this one again? Entry is 78. So you're at break even now. Up there, it's gonna do something. I don't know. So at least you got to see it was a break-even trade right there in real time. If it comes back, 71. So yeah, now at this point we were going for 78, so we're at 6 ticks, 7 ticks in now. Right now I'd move to 1 tick a profit. So now my stop would be at 77, I believe. Right here. Yep, 77, because we got in at 78. So we're at 77, and we might have gotten just taken out there. Nope. 1 tick. I'll take. So now you're good. You at least made $6 on that trade if you would have taken it. So I just wanted to show you that as an example. Thanks for watching. Make sure to visit my website, coattailtrader.com. Make sure to follow me on Twitter at coattailtrader, and follow me on Facebook, Coattail Trader. Thanks, guys, and good trading.